Bank of Canada announced another rate cut by 25 basis points, and the overnight rate, the policy rate, is now at 2.75. And the narrative that they presented at the press conference was they are fearing about the economic contraction as a result of this trade war. And as I've been telling in my previous videos, that this whole chaos coming from the US with regards to the tariff situation and the trade war, nobody really has any idea how this is going to play out in the economy going forward, because some say the tariffs are not going to be inflationary, and the reason why is this is going to do a demand destruction. So yes, some items will get expensive, but on the other side, those expensive items will actually create a lot of demand destruction, and the consumers will actually pull back on the spending on the other side. So that's the narrative from one side of the group, saying that this is not inflationary, but the other side of the group saying this is inflationary, because if certain items will get expensive and those are necessities, then of course that is going to be driving the inflation, because the consumer or the business will need to buy, right? This is a necessary item for them versus a nice to have. So they're both sides of the camps, but the consensus is, in the short term, this is going to drive inflation forward. And the other side of the impact from these trade wars is it is going to drive the unemployment up. Okay, so the industries which are going to be impacted because of these tariffs and trade wars, those companies and industries will likely to go through OPEX reduction, i.e. layoffs. So if they cut down the workforces and lay off people, which is going to drive the unemployment up, and the people who are going to be impacted will actually pull back their spending by a great degree, which is going to basically contract the economic growth at a much larger scale. So the fear is the economic contraction coming in as a result of this trade war. Even though those tariffs are not fully imposed right now, there's a lot of uncertainty being created across the economy, and the businesses are not really making decisions about hiring and investment because they are worried and they don't know what's going to happen, which is why all the major decisions like investment and hiring are on pause. Similarly, the consumers are not spending because of that fear as well, because they are fear about losing job. Okay, if you're fear about losing job, then definitely you are going to pull back your spending activities and going to build up a savings pool for the rainy days. Okay, so we are already seeing these impacts are being played in the economy. We don't really see the full impact, and we will not see until those tariffs are fully imposed, and then of course we will see a trickle down effect in the economy. But I think everybody's agreeing that this is going to have a much negative impact on the Canadian economy, because the Canadian economy is literally going through a crisis already, and now we have this trade war and tariffs, which is going to further push the economy further down, and it will take even longer time for the economy to recover, and then we'll come back out of it. So when the Bank of Canada announced a rate cut, we saw the 5-year bond yield went up by 2.25%. So why the bond yield went up while the Bank of Canada is cutting rates? So the intention from the Bank of Canada's chief was they're trying to stimulate the economy ahead of these trade wars. Okay, they're trying to make borrowing cheaper. If that was the intention, why the market thought otherwise? Okay, so the bond yield went up in other direction shows the market is not buying that decision. So the market thinks that this is going to be inflationary, and then because bond yields is all about future growth and inflation expectation, if the bond yield is going other way compared to what the Bank of Canada is doing, that means the market thinks that this is going to basically give a boost into the inflationary powers, which is why the bond yield went up. Okay, but we have to take a look over the period of long time, because the trend right now is downward from a bond yield perspective. It went up all the way to 4, and since then it has been coming downwards. So we have to see, okay, how the bond yields perform in the next through 3-4 weeks. If it continues to goes up, then of course it means the market is thinking that this is going to be inflationary. As of now, I think it could be a knee-jerk reaction. We'll have to see, but I think everybody agrees that these tariffs and trade wars is going to be inflationary in the short term for sure. It's going to bump up the unemployment, and it is also going to cause a lot of trouble from a GDP contraction perspective. The industries which are going to be impacted, they will not spend money in terms of investment and hiring more people, and the people who are going to be impacted will have to pull back their spending as well, which is going to contract the GDP. But anyway, this is the economic forecast. So from an investment point of view, I think we have to stay put. If you are in the right assets, this could be a buying the dip opportunity. So keep DCA it. As a new immigrant to Canada, one of the biggest shocks is how much of your income goes to taxes. Nearly 45% for the average family. That's why using tax-free investment account like TFSA is crucial. A TFSA lets you grow your investment tax-free. And with Moomoo, you get lower trading fees and access to professional research tools. So you're not just investing, you are investing smartly. And here's the best part. Moomoo's Cash Plus gives you 6% annual interest on uninvested cash. So even when you're not investing, you're still making money. So if you are new to Canada and want to grow your wealth the smart way, Moomoo is a great place to start. And if you sign up today, you will receive a $2,000 commission card plus deposit $100 and get $50 in stock cash coupons with up to 50% cash back. If you deposit $2,000, you will receive $150 in stock cash coupons. Don't miss out on these incredible opportunities. Start your investing journey with Moomoo today. If you're in a weaker asset, you think this asset is going to further go down, then maybe you can liquidate that. But if you have a firm belief on an asset class which you think is going to perform in the long run, then this could be a buying the dip opportunity for you to kind of DCA, lower the average cost, and this will play out in the long run. Anyway, that's my thinking, my thesis. Could be wrong, but this is how I see things are going to play out. Real estate, I think, is going to stay stagnant. The overall economy is going to stay stagnant. The condo market is already going through a major crisis, but the single family homes, I think they will stay stagnant. We won't see a lot of activity because of that fear of uncertainty. But I think 2025 is going to be like this going forward. Anyway, you let me know what you think about that. Put your comments down below. Let me know how you feel about that, and check out my courses. I have put the links into the description. Take a look at it and let me know what you think about that. I'll see you in my next video. Take care. Are you feeling lost in the complexity of global economy and trying to understand how this is going to impact your investment portfolio? You are not alone, my friend. I have been through and I have learned the hard way, and I'm trying to converge all of my experience and learnings into a course that I just designed specifically for you. In this course, Mastering Macroeconomic Fundamentals for Investment Strategies, I'll show you how to decode the economic trends, navigate market cycles, and build smarter, adaptable investment strategies. You're going to learn, analyze key indicators like GDP, inflation, and yield curves, identify opportunities in commodities and crypto alike, and adjust your portfolio to thrive in any cycle. With real-world examples and actionable insight, this course will empower you to invest with confidence, no matter what the market is. Don't just react to the news. Understand them. Enroll now and take control of your financial future today.